Hi, today is November the 1st, and this is the weekly recap for the current trades. We have November and December on, and January will be probably started later this week, assuming that we'll probably get some vol pop around FOMC. So we start with November. There's not much to say. This trade is basically a write-off or a very meager profit. I can still get another, 70 cents if I drop this put debit spread here, which I should have probably have done. And of course, the time is running against me. So if I were to, I already explained that last week, but let's do this again. I would do something like this to get about 220. Probably this late in the trade I would do this in the form of a PCS roll, so associated with a PDS here, +1 -1 here. So this is something I could do. I do not intend putting back a call credit spread just to boost. I would if the market drops rapidly and I get, let's say below 4400, I get delta to turn positive and lose whatever I've got. Yeah, maybe I would put on a CCS to flatten my delta, but that's about it. I'm actually prepared to do next to nothing, or I'm prepared just to close the trade as it is. Normally I would, as I said, I would just go for this PCS and 2 here, so I'll probably get 50 cents. It's important to start reducing that trade to allow some capital reallocation towards January. Nothing much to say on this trade. December suffered a little bit because my CCS were getting below the IV trough. We look at the IV trough here for December. As you can see, the trough is around 48.75, 4900. So because I had CCS on 4500, last week I rolled one CCS, and this morning I rolled the second one, and I've lost about $1 altogether, and if I were to close, you see it's still at this level, it's still about $1, 1.1 to close one of them. I'm hoping that as time goes by, the situation will improve and maybe close them for 50-60 cents in a few weeks. To pay for my rolls, I did a PCS roll here. I pulled one 4200 put down to 41.75, and here it was a PCS roll, so I moved one of my lower puts at 1 notch. Last week my first PCS roll was covered by some structure in the middle that was superfluous. It was a put butterfly. So you see last week I rolled one call credit spread here, and I paid for it with a butterfly 39.50, 40.50. So that this was basically a wash. I think I paid 40 cents here, and I got only 35 cents on this one, but today I paid 55 cents for my second roll, and I got above $1 for my PCS roll. I still managed to get my upper expression line improving a little bit. My delta is still flattish. The trade is safe, but we've had so much of a bull run in October from 4300 to 4600. We're not out of the woods yet. I'm just hoping the market will stabilize so that I can maybe close my call side. Still managed to get, probably if I can get to $600 on this trade, considering it was quite a bit of a roller coaster, I would be happy with that. So I don't intend really working too much on the cycle. Probably going to be another PCS at some point, and these ones are worth about almost $2. If the market really is stubbornly bullish, I would probably go for a straight PCS and close one of this CCS here. At this point, my risk reversal were pretty mild. Last week it was a call butterfly and a short put butterfly. Today it was another call butterfly financed by the PCS roll. Overall, it's to keep my delta flat, no gamma, and if the market was to drop, I think my Vega pressure would still be okay for quite a while, probably another 200 points. So this trade would be doing okay, and if I ever get to $500-600 without doing anything, that would be absolutely perfect. So not much of a risk here. It's a little bit disappointing. This year so far, I've had a good run, generally 1.5-2% month after month. And of course, November is disappointing. And I would like December not to be too disappointing this time. In terms of January, I will explain on Slack how I intend setting it up. It looks like volatility being still relatively high. I may go for a regular size, but still somehow OTM to get some negative delta at first. The market is prone for a correction at some point. Even if I still believe there could be a Christmas rally, I think we'll have another selling wave like we had in September. So we'd rather be careful and cautious for this new cycle, even though in the first 2, 3, 4 weeks generally a trade is fairly safe. Anyway, that's all I have to say on this. If I have the time, I will record some explanations about my January entry, otherwise it's going to be short on Slack. Thank you for watching, and bye for now.